Welcome to the Get Real Podcast, your high-octane boost of full-on reality therapy for personal, business, and investing success with your host, Ron Phillips, because somebody's got to tell it like it is.
Hey, everybody. Welcome back to the Get Real Podcast. Ron Phillips here with some pretty exciting news today. I don't know if you guys have heard of this or not, but I just learned that the New Heights podcast has new news. So as to not interfere with their new news, we will not be doing that on this show. There is news in the 401k world. President Trump just announced, and I say just, probably it was a little bit ago, I think August 7th, that retirement plans, so your 401k, could soon include real estate, which, interestingly enough, IRAs, solo 401ks, pretty much every retirement account except for 401ks from your current employer could own real estate. But now, President Trump signed an executive order that will allow, that's the wrong words. This is really technical, so go with me on this. 401ks were always allowed to invest in real estate, but this would open the door for private equity, cryptocurrency, real estate, and other alternative assets. So what has been the problem? Why has this not happened before now? Well, the process of adding these investments to current 401ks is really complex. And there's massive legal risks for the plan fiduciaries, the people who actually run the plans. And so most employers don't do it. As a matter of fact, I don't know hardly any who do it. Trump's order stated that the goal of this executive order was to help the retirement savers achieve competitive returns and asset diversification necessary for a comfortable retirement. And I applaud him for that. I think it's great. I think so. Really what he's doing here is that he is easing the administrative burden, the legal exposure, and the difficulty in valuing these assets. So within 180 days, he has told the Department of Labor and the Securities and Exchange Commission to revisit their existing rules and give updated guidance so that people can actually make this happen. Now, it's important to understand what this is. Wider selection of real estate investment trusts, but more importantly, direct stakes in property development projects. Very cool. Very cool. Investing in real estate with a 401k is a very smart idea to diversify your retirement and reduce the risk of retirement only invested in the stock market. I 100% agree with that. That is Todd Drowlett, veteran commercial real estate investor and broker, founder of the Titan Realty Group. Big group, by the way. If you didn't know, you can look them up. I mean, this is going to be really, really cool for everybody because it's going to bring something that a lot of people, we've been educating for, 15 years or better, that people could use their IRAs and they could roll over 401ks into self-directed IRAs and they could buy real estate with it. But most people don't know that. This will make it much more mainstream. Okay. Actually, I can believe it because Trump has been pretty on the cryptocurrency train. So he's been super, I guess, friendly to that world. And so I go through these articles. So that's the high level that you can actually do this. I think as I go through these articles that I've read a bunch on this. This one is from Realtor.com. And it's interesting because it talks about what are the things that could derail your retirement if you do this. It's kind of funny. It says many private real estate funds require investors to lock up their money for years. So if you're counting on tapping your 401k soon, that money might be out of reach when you need it most. Okay, well, so don't invest in a fund. Just go buy real estate that produces cash flow, and then you can access the cash flow immediately. I don't know what the problem is there. It says while that money is locked up, it can be harder to track, giving you less insight into whether or not you're on track with your retirement savings. Unlike publicly traded stocks, private real estate investments aren't priced daily. Well, that's true. They're typically priced monthly when you get your statements from your property management company. And if you use Lineage, the cool tech platform that we built, if your property manager is using it, then you get monthly updated insights into all 4 of your returns, not just your cash flow numbers. You might not know the true value of your holdings until they're sold, making it harder to plan around a specific purchase goal. That is just patently untrue. And most people are trying to figure out what it is that they're going to make on a monthly basis from their retirement savings, from their investments. And it's pretty easy to determine that with a property that produces cash flow, because it is like a dividend, the same kind of a dividend you would get from your funds that you buy. Alternative asset prices are subject to far more volatility than traditional ones. For example, while U.S. home prices soared close to 18% in 2021, they're expected to grow only by 3.7% this year, according to data from Realtor.com. If you're close to retirement, a sharp drop in property prices or even appreciation rate could mean painful hit to your retirement balance. Okay, this is on a real estate site. Okay, this is Realtor.com. Crazy thing is that your retirement accounts can leverage real estate investments. So it can actually go get a loan to buy rental properties, in which case, if you're leveraged into an 18% return, even at 50%, that's a 36% return. And if you're leveraged into a 3.7%, only quote unquote, only 3.7% this year, that is 7.4%. And neither one of those numbers have anything whatsoever to do with the dividend or the cash flow that is coming to you. I'm not sure a sharp drop in property prices is going to affect your cash flow, other than to probably make it go up as rents go up over time. Managing these assets can also be a steep management transaction fees, which can eat into returns. Well, not if you actually run your numbers up front and know what those costs are. I don't understand. Low cost index funds. Okay. Yep. I get it. They might have lower costs. I don't know exactly if they do or not, but my guess is they don't have solid appreciation numbers and tax benefits and someone paying off your principal and cash flow. I'm pretty sure they don't have all of those. Okay. Who might this benefit? I think it would benefit anybody who has a 401k. You do have to be the right kind of investor, though, because you have to be able to go out and assess the properties that you're buying, and you have to talk to your property manager, et cetera. Okay. They're saying here, younger savers with decades before retirement are best positioned to benefit from the least downside, since they can ride out market downturns and wait for properties to appreciate. That's true if the only thing that you're trying to get out of your property is appreciation. My suggestion to people who are in a later stage in life, are wiser than the youngsters that they just talked about, would be to focus more on cash flow than they do on appreciation, if that's what they really want out of their retirement accounts. If it's income, you don't have to sell your property to get the income. The great thing about real estate in retirement is it continues to appreciate in value while you get your income. So if you plan it accordingly, then this is just not true. Experienced investors who already understand the nuances of real estate might see value in adding it to tax advantage account, using it as a hedge against inflation and a way to diversify beyond stocks and bonds. That is 100% on point. That is a true statement. This is pretty cool stuff, guys. So if you have invested in your IRAs in the past, but you've never been able to use your 401ks, pretty cool. If you didn't know you could do either one of those things, this should be mind-blowing to you right now. And nowhere in here does it say that your IRA can go and leverage with a non-recourse loan, but it can. They have practical tips for incorporating real estate into retirement planning. I have not read this particular paragraph. We're going to read it together. I can't wait to hear what they say. Before adding real estate to your 401k, it's important to ask hard questions. How will this fit into your overall portfolio? You should definitely ask that for sure. How can you afford to have a portion of your retirement savings tied up for years without easy access? That is important. If you need to sell it so that you have access to your capital. If your capital, however, is producing enough cash flow for you to live, well, then that's probably less relevant, but you should definitely consider it. Understanding your liquidity needs is key. True. Especially if you plan to use these funds for a major purchase like a home or investment property soon. That is hysterical. It is an investment property. So I don't really know what they're talking about. Now, if you're going to use those funds to buy a home, okay, I could see that. But you could just use the funds from your current home to buy your next home. I don't know. I really don't know what that meant. And you certainly wouldn't use money from the investment property to buy an investment property unless you were trying to trade up, in which case you would already have a plan surrounding that. You'll need to work with a record keeper or advisor who can balance long-term growth potential with your short-term needs. While direct real estate holdings or private funds can offer attractive returns, they also carry more risks that are not all savers can weather. I would just remind everybody to go back in time to 2008 and tell me how risky it was to have your money in the stock market. Pretty sure that was a riskier play than even the real estate market in 2008, because the people who bought in 2008 and had cash flow coming in were just fine weathering the storm. But if you were trying to live off of 50% of your retirement accounts, I actually think it went down 40 or 50%. I can't remember. It might even have been a little bit more. Whatever it went down, you just lost that money. And if you were trying to cash that out to retire, it was really difficult. We helped some people buy cash flowing real estate during those times and have enough income to be able to retire. But I don't think one is necessarily riskier than the other one, especially when you have 100% control of the real estate and you don't have any control over the business in which you are invested with a stock. It's also worth remembering that a 401k is not the only way to gain real estate exposure. True statement. Taxable brokerage accounts, IRAs, and REIT exchange-traded funds can provide diversification with greater liquidity. For some investors, blending these approaches can deliver the benefits of real estate without locking up too much retirement capital. And you could just buy them outside of your retirement accounts too, but the whole purpose of this show was to let you guys know that President Trump has done something pretty cool here. He's opened up potentially your 401k to real estate. Very cool. Way to go, President Trump. And on that good note, get out there and make something happen.
This has been the Get Real Podcast. To subscribe and for more information, including a list of all episodes, go to getrealestatesuccess.com.